Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 4th of June. Starting off with the FTSE 100, where yesterday's concern that the price action of the UK index was a bit dodgy proved to be correct. We had a shooting star candle yesterday, and we followed through on the downside today, just on the floor of that rising trend channel from February, which looks as though it's going to break. The initial support here, the 50-day line 81.30, and then below that the prospect of retesting 8,000. The reason for being slightly negative today is because the RSI has also failed at neutral 50 and has also failed at that uptrend line that we had there since January. So that's a leading indicator on the downside potentially. At this stage, only a nice bounce off the floor of the channel from around 8,200, or a break of yesterday's peak 83.71, really suggesting that today's fall, or the fall of the last 24 hours, is just a blip. Moving on to the DAX, and here we can see that we're also looking a little bit negative, still in that range, the recent range around 18,400 to 18,900, but struggling a bit. RSI just pushing back below the neutral 50 level, so that does suggest that we'll need to test the 50-day line and the floor of that rising trend channel from October, 18,300, if nothing else. Worst case at the moment is probably a move down to the 18,000 area, basically the April-May trading zone. On the upside, end of day close above 18,600, the minimum really yesterday's high, to change the pattern. Moving on to the Dow, and here it's been a struggle as well over the recent past, especially given the way that we've had a failure at the 50-day line, 38,800. Still the risk of a test of April support there towards 37,700, and maybe even the support for 2024, 37,100, but hopefully we'll stay within that channel or thereabouts. If you are concerned, you either wait for an end-of-day close through the 50-day line, 38,900, or RSI 50 plus versus only 43 at the moment, so the RSI is looking weak there. On to Bitcoin, which has revived itself over the recent past, but we need to stay above the rising 50-day line, 65,000, the floor of that channel there from back in November. If we can do that, then we are assuming that we'll head up to the record levels, 73,800 or so, by the end of this month. The best case scenario would be to hit the top of that rising trend channel from November, 86,000, by the end of July at the current rate of progress. If we do break down, worst case is towards 57,000, which is the old March support line projection. Moving on to gold, which was battling with its 50-day line yesterday, but we've so far bounced off it, which is good news. 23.40, the nominal level there. Above that, looking for a retest of the double top 24.50 over the near future, hopefully by the end of this month. If you're cautious, you would wait for a breakthrough with 23.90 and recent resistance. RSI right on the right side of neutral 50, which is a help and suggests that the worst may be over after the pullback that we have seen. Moving on to the stocks, and it's good news for African Pioneer after Colin Bird's presentation in the city last week. We've had a push to the upside. Our first buy signal was a break of that trend line there from basically early last year, around 2.25 pence, and the second one would be a break of 3.25 pence on an end-of-day close basis, the 2022 resistance line, which could take us up to a 2021 resistance line projection as high as 4.75 pence by the end of this month. The added sizzle is the way that the start of this week has given us a golden cross between the 50 and 200-day lines, which, given the slow move of African Pioneer over the recent past, does seem to be quite significant, and the shares are underlining that. Moving on to Ascent Resources, which not always the first choice in terms of covering a situation here, but we have actually had a gap up off the lows. We've also had bullish divergence, so lower lows for March, April, May, but the RSI remaining the same as it was at the beginning of the year when the shares were much higher. So probably all we're looking for, well, at least in terms of the near term, is breaking that 50-day line around 2.16 pence and heading to the top of that channel there, the descending channel from October, as high as 2.7 pence. Best case would be that that happens by the end of this month, although that might be pushing it. Ideally, we stay on the right side of recent broken resistance at 1.9 pence, whatever happens. Crimson Tide is next, and even though this is probably more a fundamental than technical situation, it's interesting to see that shares are or have gapped through their 200-day line at £1.69 for the first time since August last year. We also have a rising 50-day moving average at the low and a rising trend channel from back in September, with the top of the channel there heading for £2.17. That's on the cards while we're above the floor of the gap there at £1.63, but obviously that's a technical view, not a fundamental one. Moving on to E-Star, which is edging higher, and here we've had a decent rebound above a rising 50-day line. A previous target there was around 2.9 pence. Next target there is high as 4.4 pence, and hopefully we could get that by the end of this month, while we stay on the right side of 3.5 pence, or if you want to stretch it down to the 50-day line currently at 3.2 pence. The stronger gas prices, I think, helping energy pathways, apart from also the fact that it didn't have a great start to the market. We've got W-shaped rebound there, and we've broken a trend line there at 2 pence, which is what we were looking for. Broke the 50-day line at 2.14, which was what we were also looking for. And the final thing we were looking for was an end-of-day close back above the old March support there, 2.65. The more of that we can get, the more we can pencil in 3.25 pence by the end of this month, which was the old February peak. Moving on to Greenroc, which actually has a surprisingly good-looking chart because it was a bear trap gap reversal, and now we've had support on a rising 50-day line. We're expecting that November resistance line there at 2.15 pence to be broken on an end-of-day close basis and to get up to as high as 3 pence by the end of this month. That would also go a long way to filling the gap up to 3.3 pence. The gap down there from back in November, but the key is holding above the 50-day line, 1.9 pence. A bit of a left field selection now, Inspiration Healthcare, and the reason for that is that we've got this U-shaped turnaround here for the shares. We want to see an end-of-day close back above the bottom of the gap there at 20.5 pence, which we may get later this week. And obviously a U-shaped turnaround reflects a U-turn in the share price and sentiment as well, and that could take the shares up to as high as 30p by the end of next month, while we remain above recent resistance around 17 pence. Moving on to a retail favourite, which is Kefi, and here a nice dance above, at the moment above the rising 200-day moving average and rising 50-day moving averages. That suggests that we're in the run-up to a golden cross. We've also had the bear trap island reversal, so this looks like a very strong situation chart-wise. We're looking for a golden cross later this month, and the run-up to the golden cross is typically the strongest part in the cycle. Initial target here 0.8, and then after that looking for up to 0.95 pence by the end of next month, while we remain above the 50-day line at 0.6 pence. Rather, I suppose a rare inclusion again for Nexus infrastructure. You can see that we've hit the top of that broadening triangle there from back in August last year. The setup here was a bear trap gap reversal, and that's worked well. We've also had another unfilled gap to the upside at the end of last month. All we're waiting for now is that, we've probably got it actually, the 200-day line rising, so that suggests we're into the run-up of a golden cross. Best case scenario target here would be up to as high as £1.94 by the end of next month, especially while we remain above resistance on the way down at £1.26. See a lot of people getting very excited about plant healthcare, which to my mind is maybe slightly late, given that the real buy signal was around 4.2 pence when we broke through neckline resistance last month. And we've had an unfilled gap to the upside since then. In fact, we've had gaps in both directions. But our initial target here was 5.5 pence after the 4.2 pence break. And the second target here was as high as 7.6 pence, which hopefully we'll get in a few days. If you're a fan of the shares and looking for greater glory, then the next destination by the end of next month would be up to the top of that September gap at 9 pence. And hopefully we do that while we're on the right side of the 6 pence area, which is the top of the latest gap. Moving on to power metal, which has rehabilitated itself in the recent past. Here you can see that we hit our first target there around 17.5 pence, and above that we're still looking for up to 27 or 28 pence at the top of that rising trend channel from this time last year. Going on to the last two, Petro, a stealthy riser over the recent past. Looks like we're getting a V-shaped bull flag here and above 4.5 pence. Looking for the shares to hit the upper parallel of that rising trend channel from back in the summer as high as 6 and 3/4 pence, which basically retests July resistance. Ideally, we stay on the right side of 4 pence. Finishing up with another unusual name, Totally, and here the reason for the inclusion is that we gapped up through the 50-day line. We've held that gap and the 50-day line ever since at 5.7 pence. That suggests that we'll not only retest last month's resistance at 9 pence, but head up to 11 pence as soon as the end of this month. That's it from me today. More updates tomorrow.